Very good morning, students. Hope you all are fine and good. So, the chapter that we are going to see today is chapter 10, that is Reserve Bank of India. Students, last class we saw the video on Reserve Bank. So, I'm going to just do the continuation of this chapter. So, we saw about the need for the study of service banking. What is banking services? I have explained. Historical development of bank. We have just seen this concept. We saw different banks like different banks which was launched and according to the establishment. Then we saw the definition of bank, and I just started with the next topic, that is we saw about the central bank, the origin of RBI. Okay, so now we even completed the topic with organizational structure of RBI. So now the topic that we are going to see today is functions of RBI. What are the functions of RBI? See, students, I just want to give a quick recap. Okay, RBI is nothing but the Reserve Bank of India. So it is the central bank in India. Okay, so every country has one central bank. Okay, so as per our country, the central bank in India is RBI, that is Reserve Bank of India. So let's see the functions of RBI now. Okay, so we have it under three categories. That is, the first one is leadership and supervisory function. That is the first one. Second category is traditional functions, and the third one is promotional functions. See, you have so many subtopics under these topics. I will explain about the concept now. Okay, so let's continue with the first topic, that is leadership and supervisory functions. Okay, see the explanation given here. India being the fastest growing economy in the world, India is expected to play a major role in the world's affairs by many countries. RBI being the banking institutional head of India has to be a part of global institutions. It has to transform the quality and size of the banks in India to the level of banks in developed countries. So such functions get prominence in current scenario. So what is the leadership and supervisory role? So India is actually a growing country, isn't it? Do you agree with that? Yes. So we are one of the developing country in the world, isn't it? So India is actually expected to play even a major role in the world affairs also. So we are trying to contribute our wealth, and we're trying to improve our wealth where we want to prove ourselves in the world economy. So RBI is actually, since the RBI is the banking institutional head in India, so it is a part of a global institution only. Okay, actually what it has to do is it has to transform the quality and size of the bank in India to the next level. It has to do that because we are in developed, we are actually underdeveloped country, isn't it? So RBI is a major role. It is actually the role which plays for the finance. So the RBI has to promote the business in our country. So such functions get prominence in current scenario. So what is that? See here. So the first point that we have is India's representative in the World Financial Institution. The first point is India's representative in the World Financial Institution. What is that? So in order to maintain the consistency and harmony with the international banking standards, the RBI is associated with the Basel Committee on the Banking Supervision. Since 1997, that is, RBI represents the Government of India, International Bank for Reconstruction and Development, an international monetary fund in which India is the member since December 27th of 1945. So what is this? So see, India must become, see, I already told you, India has started its development. So since we are an underdeveloped country, India, the RBI plays as a representative role where we are trying to improve our economical status, and we are trying to develop India. Okay, so that is what. So in order to do that, we have different standards of RBI, and it's associated with the Basel Committee. Okay, so the next point is regulator and supervisor of Indian banking system. What is that? So the broad guidelines for all banking operations in the country are formulated by the RBI. See, whatever guidelines which we have it right now that they follow in the banks, that is actually formulated, it is implemented only by RBI. RBI is the only the RBI is the only way by which all the rules getting implemented in the banks. Okay, RBI has the power to issue license, control and supervise the commercial banks under the RBI Act of 1934 and the banking regulation Regulation Act of 1949. It conducts inspection of the commercial banks and calls for returns and other necessary information from them. So what do the RBI do? Actually, RBI is the regulatory authority who is going to control about all the rules and regulation that is concerned with the commercial bank, that is guided and it is followed only through by RBI. Okay, so even inspections in commercial banks or even the calls and even for the returns, that everything is followed and done only through RBI. Next one is monetary authority. What is monetary authority? The RBI formulates, implements and monitors the monetary authority of the country in order to maintain the price stability. See, whatever the money which is related, RBI is what actually? RBI is nothing but it controls, it consists of the, about the monetary measures, isn't it? So monetary is one of the biggest things. So when you try to talk about the economy, about the development, then monetary role plays a major role. Isn't monetary means nothing but monetary policy means money. Okay, the policy related to money, that is what is monetary. So the price stability is very, very important in this. So controlling inflationary trends and economical growth. So it provides advices to the government concerning agricultural finance, resource mobilization for implementing plans and legislation affecting the banking and credit international finance. So it is the authority which controls the monetary control. So anything which relates with the money or resources mobilization, that everything is done by the RBI only. The next one is closely monitoring economic parameter. That means it closely monitors the economical parameter, the growth of the economy. Broad economic parameters such as employment level, price levels and even the production levels, trade cycles, foreign investment flows, then balance of payments, financial markets, etc. are closely monitored by the RBI in order to achieve the economical stability and growth. What is this? See, when you want to do some changes in the economy, then you need the money. The most essential thing is you need the money. For that everything is monitored by RBI only. So what do? They just check for the production level, they just check for the trade cycle level, then foreign investment flows, then balance of payment. All this is done only by RBI. Okay, so that is the thing given here. See, are closely monitored by the RBI in order to achieve the economical stability and growth. The Board of Financial Supervision of the RBI meets at least once in a month. So what do? They actually meet for once in a month only to closely monitor all these current developments in the country. Okay, promptly responding to new challenges. What is that? Promptly responding to new challenges. So see, promptly responding to new challenges. Whenever challenges arises before the Indian banking system, RBI promptly attend them by issuing master circulars and by organizing committees to analyze, review and strengthen the Indian banking. So whenever they want to whenever some problem comes or whenever there is a crisis, financial crisis, what do? They just make some new policies and all, and they just send a master circulars and then they will take the new decisions. Okay, a wealth of information can be found in every master circular or committee report. Example, Gopalakrishna Committee on Information Security, Electronic Banking, April 2010. So that is actually done. So what do? They actually a wealth of information, what and all information they need, they are able to do it, and a master circular is also given, and even the committee called as Gopalakrishna Committee actually set off. That is an example actually. Before this, like how they have taken an immediate decision based on the situation. That is what this is. The next topic that we have, that is the second subtopic, is traditional function. The traditional function is banker and financial advisor to the government. What is this? See, RBI only has a complete advisory role. The banking system is done only by RBI. So, of course, since all the regulatory function or advisory thing is done by RBI, it is actually a banker and even it is a financial advisor also. And it is a financial advisor to the government as well. The RBI accepts the money into the central and state government's accounts and make payments on their behalves. So, what do? So, if there is any debt for the state government or for the central government, that that is taken by the RBA, and they just pay it back. Okay, so it manages the government debts and is responsible for issue of new loans, and even if they want to get new loans, that is also issued by RBA only. It advises the government on the quantum, timings and terms of new loans. So when they need it for new time, if they want to extend the time or if they want a new loan, that every advisory thing is done through only by RBA. It provides ways and means advances to the government to tide over the temporary financial needs. So whenever there is a financial need, that is done by the government, is done by taken by the RBA only. So it takes up responsibility of investment of the surplus government funds, and intergovernment and interdepartmental account adjustments are carried out by the RBA. So whatever we have it, that is within the department, if there is anything, that is also taken out by the adjustment is done by RBA only. Okay. See the next point here, monopoly of note issues. What is monopoly of note issue? It is nothing but, see, when you just talk about the monetary fund, it deals with the coins and the rupee notes also. So this, both the rupee notes and the coins are distributed, and it is circulated. It is actually printed by RBI only. Okay, that is what monopoly. So no other person from the government is going to do this work. Only RBI is going to issue the notes, the rupee notes or the coins as well. See, the RBI is the sole authority for the printing and issue of all the currency notes in India except 1 rupee notes. It is the duty of the RBI to ensure that a sufficient number of good quality currency notes is available to the public. It exchanges the currency and coins not fit for the circulation. 1 rupee note and all coins are issued by the Ministry of Finance, and currency notes are printed at Nasik, and then Divas, Salboni, and Mysore and Hoshangabad. See, these are the places where they print the money. Okay, so except for the 1 rupee note, all the other notes are issued by the RBI only, but this 1 rupee alone, it is actually taken by the finance minister only. Okay, so they are just doing it under different departments. So they have different places where they issue this also. What is Bankers Bank? Bankers Bank means RBI is the head of all other banks. So if you want to take any decisions in a bank, that is actually controlled by the RBI only. So they are the people who are going to set the rules or norms for the other banks. See, the relationship between the RBI and other banks in the country is just like the relationship of a commercial bank with its customers. So it is actually a relationship with the customers. That is what we call it as the Bankers Bank. So the RBI maintains the current accounts of all the commercial banks. So they are just the people who are handling the current account for all the commercial banks, so in the country. And all the scheduled banks should deposit a percentage of cash reserve with the RBA. All the banks can receive loans from RBI by discounting of the bills and against approved securities. So what do? So all the other branches, the banks and the branches, they have a account with the RBA, and they have some reserve, that is cash reserve. They just have it with the RBA only. Okay, and even they just if they want to get any loans, that is also taken by these banks. Take this, the opportunity is done. It is also done by the RBA only. Okay, the rediscounting and the bills against that is approved by the securities, that everything is done by RBA only. Control of credit and liquidity. What is that? Controlling the credit, that is credit money, is in circulation, and the interest rate in the country is a major functions of RBI. So when you just circulate the money, like how the money should be circulated, what interest must be fixed for that, when you give loan, like how much interest you can fix, that everything is done by RBI only. For this purpose, what do? Is the RBI uses quantitative and qualitative methods of credit control. So ensuring the availability of sufficient cash and credit for the business transactions and investment purposes in the economy is the responsibility of RBI. So they must first check like how much money they have, the sufficient funds are there or not, and then they will fix the interest for such money that they are going to give it as a loan. Okay, then only they'll do everything. See, what is quantitative method of credit control? The method which influences the total volume of credit in Indian economy are called quantitative or general methods. See, so when you just take the total volume of the credit, when you just take the total credit value from that in Indian economy, and that is called as a quantitative method. It means quantity. You measure in quantity. Okay, that is also called as the general method. An increase in the first three measures will reduce the volume of the money in circulation in India and vice versa. So when you just three about the next three measures that we are going to talk, then it will actually reduce the volume of the money and even the circulation in India. That is what. So when they do something, what happens? The circulation of money itself goes down. What is that? Let's see that now. Bank rate policy. When the bank rate, when they fix the bank rate, when the bank rate is going to be more, what will happen? Automatically the money circulation, they have to give more money to the bank, the RBI will have more money, and which will reduce the cash in hand, isn't it? So automatically the money flow will go less. See, bank rate refers to the rate at which the RBI rediscounts the bills given by the scheduled bank. So they will just give discounts. So when there is a discount for the bill, that will be rediscounted, means they will take out the discounts, and so they have to pay more money to the bank. So because of this, what happens? So they need to pay more and the money will go less in the hands of the people. That is the first one. Cash reserve ratio means it is the ratio of the cash reserves with the RBI kept by the scheduled bank in proportion to the total time and demand liability with them. So see, when you have some money fixed, CRR is nothing but the cash reserve ratio. Like how when you open an account, you pay some money to your account and you have it as a opening balance, right? You should have a permanent balance in your account. They will tell you your minimum balance should be around 5,000 in your account. It means you must have that minimum 5,000 in your account. Every time you must maintain that. Like same way, the CRR is actually fixed by the RBI to the other banks. So when that is getting increased, automatically the money flow in the bank also will get reduced, and the cash in the hand of the people also will go less. That is what cash reserve ratio. Statutory liquidity ratio means it is the ratio of the money and money equivalents kept within the bank in proportion to the total time and demand liabilities with them. So see, SLR is nothing but it is a ratio of the money, like how much ever money they have it, and the money which is equivalent. We even call it as a money market. We even saw, right? So in that what and all we have that everything is equivalent. When you have it, all this, excuse me. Actually when you do a business, what happens is there is called as the products which you have it like a draft or demand draft and all. So when you just give it to them, it will be easily converted to cash. Anything that is easily converted to cash, that is called as the money instrument. Okay, so like that, when you're able to do it, so all that they will return to them, and then they will get that some proportion will be there for that money equivalent, that everything will be kept within the bank in to the proportion the proportion to the total demand. So the time and the demand, according to that, they will have it in hand. So because of this also the money supply will go down. Next one is open market operation. The RBI directly buys or sells the securities. So what do? Is they will buy or even they will sell the securities and even the bills in the money market, either to decrease or increase the total volume of the money. Okay, so what happens is when the RBI directly, when they buy it or when they sell it, the securities and bills in the money market, either to decrease or the bills in the money market will actually go decrease or even it will increase the total volume of the money. So that is the open market operation. So here what happens? When they buy it, automatically money comes in and the circulation will go high. That is what. Okay. Qualitative credit control means what? See, two measures which is very, very important in this topic is we have qualitative and quantitative and qualitative credit control. Okay, so qualitative means quality. That is what. See, these methods influence the volume of money in selected or particular sectors of the economy. So like how they are doing it. Rationing of credit. What is rationing of credit? Maximum limit is fixed for lending to certain sectors or specific purposes. So for example, if it is a micro industry, if it is a micro enterprises, some limit will be fixed for the based on their turnover. So that limit only is till that they will be able to lend them. So more than that they cannot get the money. So that is the rationing of credit. They will fix one limit for the credit. Okay, that is what rationing of credit. Marginal requirement means, so it refers to the percentage of the value of securities submitted before the issue of loans. So before they get any loan, they get some securities. They get some percentage of value of securities. That is marginal requirement. Next one, direct action. The RBI takes corrective actions on any banks or banks that does not follow its guidelines. So wherever the RBI is going to take corrective actions or on any bank or banks, so which does not follow the guidelines, then that is direct action. Okay. Moral suasion means The RBI puts pressure on the bank and towards the liberal or restricted lending during the certain periods. So what do? They actually, the RBI, they put some pressure on the bank and toward the liberal or restricted lending during. So they will put some restrictions for the people when they get the lending. That is moral suasion. So lender of the last resort. What is lender of last resort? In times of the emergency, any bank in India can approach RBI for financial assistance. So whenever they have some emergency, when they are not able to give funds to the people, they can ask help to the RBI. So RBI provides them even credit also. And when other sources of getting credits are exhausted, all the bank can obtain loan from RBI, and hence it is called as the lender of last resort. So when not only for one bank, if other banks also find the same kind of issue, they can all go to RBI and they can ask some loan for their bank. So that also they can do. That is why it is called as the last resort, the lender of last resort. Clearing house services. What is that? RBI acts as a clearing house and maintains a clearing system for all commercial banks. It acts as a clearing house. RBI is actually a clearing houses, and even it maintains a clearing system. So what does it do? It does for all the commercial banks. Okay, the aggregate amount of checks presented by the bank on other banks represents a claim by that bank on other banks. Similar claims are made by all the banks on every other banks in the clearing, and a net settlement is arrived at the clearing house, and according to the debit or credit entry is made in their current accounts. The cash reserve kept by the bank with RBI is utilized for this purpose. And clearing the system saves time and eliminates the paperwork and other difficult tasks involved in the interbank settlement. And through the RBI maintains a clearinghouse system, only 14 clearing houses are owned by the RBI, and 840 are managed by SBA and 6 by national banks. What is this actually? Clearing house services means nothing, students. So when the bank when they get loan from other banks, what they will do when they don't have find money, they will get loan from other banks. Okay, so like that, when they get loan from other banks, so like this, they go increase day by day. So like this, when it goes more and more, automatically what will happen is there is an option called clearing house services. It means that the RBI itself will directly settle that money from their reserve money. There is some reserve money which is maintained for all the banks, right, by the RBI. That money they will use it for this purpose. For the clearing houses they will use it. Okay, so and they will pay back their debt. And because of this, what happens is the paperwork, all that will get reduced, because RBI only is going to do this. So easily they can solve this issue, and they'll be able to continue their business. Okay, custodian of foreign exchange reserve. What is that? So RBI is a place where you can even take the exchange of see, when you are doing some transaction from one country to the other country, there is an involvement of different currencies, right? So for that, even RBI plays a major role. What is that? The RBI maintains a reserve of gold and foreign currencies. See, it has even a gold as well as it has a foreign currencies also. So when foreign exchange reserves are inadequate for meeting balance of payments problem, so when they just use the foreign reserve and it is not sufficient to just bring the balance in the balance of payment, at that time what happens is it even borrows from the International Monetary Fund. RBI actually even lends from IMF also. So it also administers exchange control of the country and enforces the provision of Foreign Exchange Management Act 1999. Development and maintenance of foreign exchange market in India is also the function of RBI. So it also plays a major role for maintaining the custodian for the foreign exchange also. So when it is not enough for them to give the money back, even they can borrow it from the IMF also. Okay, that is what maintenance of foreign exchange rate. What is that? So the RBI manages exchange value of the rupee in order to facilitate the India's foreign trade and payments. There is one price fixed by RBI for every time. Whenever for every day it gets changed actually. The USD value, the dollar value, or dinar value, whatever it is, that every currency the value gets changed every day, and that is updated by RBI. And whenever there is a working day, that it gets updated every day, and according to that only the calculations are done by the banks. Okay. See, that is what the RBI manages the exchange value of the rupee in order to facilitate the India's foreign trade and payments. It ensures that normal short-term fluctuations in trade do not affect the exchange rate. So when they're doing the trade, that normal changes that should not affect the trade. For that, they just maintain the balance. Okay, economical imbalance is actually maintained through this. See, collection and publication of authentic data. What is that? It has also been entrusted with the task of collection and compilation of statistical information relating to banking and other financial sector of the economy. So it is also trusted, the RBI is also trusted as the collection agent, like how they actually collect the data, and their task is to collect the data, and even they even have it for the future statistical report. For that also they have it, and even the information relating to the banking and other financial sectors are also there with the RBI. So RBI monthly they have it in a bulletin, they will have an annual report, and even various committee reports are also they contain the treasuries of authentic data and all. Okay, so that is also maintained by RBI only. And the last point that we have is promotional function. The RBI performs a wide range of promotional functions to support the national objective. What are the promotional functions? First one is nurturing the banking habits among the public. What do? They just give the they will just educate the people to use the banks. Always when they are doing some transaction, they just educate them to use the banks often. It is responsibility of RBI to maintain the public confidence in the banking system, and it protects the depositors' interest and aims at providing cost-effective banking services. So they protect the interest of the investors and even help them in doing the banking services properly. That is the first one. So in order to include the more people to avail banking services, they do this actually. And it has also taken up the task of extending the banking system territorially and functionally to the unbanked areas. That is also done. Okay, the next point is grievance settlement measures. So RBI has appointed 20, actually they have appointed 20 banking ombudsmen in 20 state capitals. They have done it for the 20 capitals. And banking ombudsman scheme means what? Means so if you have any problem with the bank, you can go and give a complaint over there. So they will just settle your issue. That is what. So see, there is the banking ombudsman scheme is a speedy and inexpensive forum for resolution of the customer complaints relating to certain services rendered by bank in India. So when you have any issues with the banking frauds or any issues with the bank, then you can go and give a complaint to the ombudsman. So they will rectify your issues. Okay, you have around 20 in the state capitals. You have around 20 that ombudsman scheme. You have around 20. Okay, agricultural development. Agriculture industry is specified as a priority sector by the RBI. The loans of all the scheduled banks should consist of a percentage of loans to priority sector, and it works in a close association with NABARD to develop the agriculture in India. So NABARD is a development for the agriculture. So even they help a majority of the fund they help for the agriculture development, because India is actually the 70% of the Indian income is from the agriculture only. So they concentrate more on agriculture. Okay, promotion of small scale industries means micro, small, medium enterprises are included in the priority of the sector, and not only the agriculture, even the industries are also concentrated. So all scheduled banks are required to open a separate branches to specialize the financing of these industries. For them also they have a separate accounts. Facilities of foreign traders. So the RBI has simplified the rules for credit to exporters, through which they can now get loans, the long-term advances from the bank. So RBI even they have made the rules very simply, and even to get the credit and to the exporters, and through which they can get a long-term advances also from the bank, that they are able to do it. Okay. Next one is supports the cooperative sectors. It means it helps the cooperative banks by relaxing the rules and providing the indirect financing. So it actually it helps the cooperative banks and all, and even to get relaxes and on the rules, and even they help for the indirect financing also. Like how the rupee symbol was changed from rupees to this symbol by the government of India on July 15th of 2010. This became necessary since other countries, Indonesia, Mauritius, then Nepal, so Pakistan and Seychelles also call their currencies rupee. So among global currencies, Indian rupee is given the code INR. So Indian rupee by the International Organization of Standardization. So this is also done. So when you compare to the other countries, even few countries are there where they have the currencies termed as rupees. So for that, in order to identify the Indian rupee, we call it as the INR, Indian rupee. Okay, that is actually recognized by the International Organization for Standardization. This is actually done in order to identify our currency. So still here this lesson gets over, students. So please read the lesson line by line. You will get 1 marks from inside your books also. This is one of the most important chapter. You will get repeated question from this lesson. Okay, so students, if you have any doubts, take a note down of your doubts, and you can you can just ask me in your live session. Okay, hope that you all are fine and healthy. Okay, be safe. So prepare well for your exam. Thank you, students.